Hey everyone, welcome back to Corporate Decoder. Today we're diving into Helmerich Payne's latest quarterly report. And let me tell you, it's a real mixed bag. It's like ordering a fancy burger and finding out they forgot the patty. We'll be going over Accession some debt and how they did overall. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you're looking to chat about this stuff in real time. First off, Helmerich Payne had about 99.4 million shares of common stock out there as of late April, and this is important for calculating earnings per share. Alright, let's get to the meat of this report. We're going to cover the financials, management analysis, and a few other key items. Let's dive into some numbers. As of March, they had about $174.8 million in cash, but let's also note that they had $223 billion in long-term debt. We'll get to that debt later on. They show about $786.8 million in accounts receivable. That's money owed to them. But they also set aside about $16.9 million for potentially uncollectible accounts. Big ouch. Moving to the income statement for the 3 months ended in March, we see they pulled in about $1 billion from drilling services. The same time last year, they only made 685 times 1 million. That's a pretty big jump. Digging a little deeper, their interest and dividend income was about $7.3 million, much less than the interest they had to pay, which was $28.3 million. Earnings per share, basic and diluted, are just a penny for the most recent quarter. And that means that even though the company did revenue, at the end of the day, the company barely made any money for its shareholders. For context, the same period last year, it was around $0.85. Okay, let's talk cash. For the 6 months ended in March, they got about $214.40 and $4 activities. But if we look further down to investing activities, they used about $1.8 billion. A lot of that comes from buying another company. During that period, they paid $14.4 million in interest and $100.8 million in taxes. That's just money flying out the door. So a big part of this report is talking about their acquisition of KCA Deutag International. They said it was completed in January. Helmerich Payne paid about $2 billion in cash, nearly $1 billion for the company itself, and over $1 billion to pay off KCA Deutag's debts. This acquisition is a huge deal for H&P. It gives them a much bigger international footprint. With the KCA Deutag acquisition, Helmerich Payne has changed how it reports its business segments. The offshore business now includes KCA Deutag's land operations. The old KCA Deutag manufacturing business is now lumped into other along with real estate. This is a quarterly report, so it doesn't have all the details of a full annual report, but it's still important to read it alongside last year's annual filing. They have restrictions on a big chunk of their cash. About $70 million is being held for potential insurance claims. Okay, some legal mumbo jumbo. Because they issued debt to a select amount of buyers, they need to offer the opportunity for those investors to do some complicated accounting thing that if they don't follow, they will need to do some additional interest payments. Let's go back to the acquisition of KCA Deutag. They used outside specialists to figure out the fair value of everything they bought, and turns out a lot of these numbers are estimates, so the final price tag could change. It may take up to a year to finalize all those numbers. So H&P got about $2.07 in assets, but they also took on almost $900 million in liabilities when buying KCA Deutag. So in short, H&P estimates that it got 1.85B in assets after taking on all the liabilities. It's interesting to note that they also have to pay a minority interest third party. Since it's not 100% takeover, they will need to pay out from the revenue some existing companies. When acquiring KCA Deutag, Helmerich Payne also picked up right-of-use assets for real estate and drilling equipment worth about $47.3 million. These are basically leases where they get to use the equipment as if they owned it. They also created goodwill, which is an asset, and it means that the brand is worth $300 million. It's important to remember that they need to prove out if that brand name and goodwill amount is accurate in the future by comparing their performance. So a huge part of this financial picture is something called goodwill, which they need to test every year to make sure it's not losing value. The company also has a bunch of other intangible assets. Think of stuff like customer relationships or brand names. These assets decrease in value over time and are reported in their earnings statement. In the next 5 years, they predict these intangible assets will decrease by over $200 million, money gone. They borrowed almost $500 million on a term loan credit agreement. H&P has a stake in Tamboran, focused on natural gas in Australia. One of H&P's executives even sits on Tamboran's board. There was a fire at one of their well sites. Luckily, insurance covered the loss. Helmerich and Payne typically signs day work contracts where they charge a daily rate for drilling. Revenue is recognized as they provide those daily services. This means they're getting paid over time, not all upfront. As of the end of March, their backlog future contract revenue was about $5.5 billion. Of that should be earned during the rest of this year. There are risks of doing business in other countries, but they try to keep business spread out. They have a stake in another company called Tamboran. One of their executives even sits on the board for that company. Ted, now let's zoom out and look at the big picture. Helmerich and Payne made a bold move acquiring KCA Deutag, massively expanding their international operations. But it also loaded them up with debt. I would say one big risk is that about 20% of their revenue is concentrated in a single customer in Saudi Arabia. If that customer pulls back, it could hurt. Overall, H&P is betting big on future growth. They've diversified, but they've also taken on more risk. Alright, that's our breakdown of Helmerich and Payne's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.